Hey everybody, it's me, Gregory Mannarino. How are you today? It is Tuesday, January 9th, 2018. People, the story right now, as I am doing this video blog, is once again right in our face, and that is the bond market. There's a sell-off going on right now, and that pushed the 10-year yield to 2.52. I want you to think about what I'm about to say. The spread, or the difference between the 10-year yield and the 30-year yield is 0.32%. Who or what entity in their right freaking mind would agree to hold debt for another 20 years for another 0.32% yield? Are you kidding me? No. This issue here is, well, first of all, it's flattening out that yield curve even further. Number two, it's putting pressure on the stock market. Stocks opened up higher than they are right now. I think the Dow Jones Industrial Average is up about 40 points as I am doing this video blog. It was up about 80 earlier, but this is rattling the markets now. In the video that I did last night, the second video, I explained to you that they will not allow a meaningful bond market sell-off to occur, meaning they will not allow the market to determine in any way the fair value for debt. Let me ask you, since we all know that this debt can never be paid back, ever, what is it worth? What's the value of U.S. debt, for example? It's zero. But again, there are those out here that are willing to buy up this debt. Who's buying it? Of course we know who's buying it. It's one entity and one entity only. Well, a couple. It's governments that are trying to prop each other up. It's the Federal Reserve propping up our markets through this mechanism. Who would want to hold a bond here with a market that is melting up? And you want to hold a 30-year debt note to earn nothing. I mean, it's literally in the negative if you have to factor in the actual rate of inflation. You're holding a bond here, you're losing money, cash. So understand where we are in the grand scheme of things. It's that bad. So again, unless this gets under control, unless they start buying this up throughout the day, markets are going to follow lower. They don't like the 10-year yield where it is right now. There's no doubt about it. And that spread, watch the spread between shorter-term debt and longer-term debt, and you could figure out the yield curve. It's incredible, people. Junk bonds, talking about bonds, they're selling off right now. And you know what that means if you follow this blog. When the market's buying up the junk bonds or high yield, that means it wants to take on risk. If junk bonds are selling off, despite the stock market being higher right now, that's a signal that this market may give some back. It needs to. The market is out of control. There's absolute euphoria going on here in the market. And that bond market, it's like, it's doing this. Go have a look at it on my website. You know what came to mind this morning? That song from the movie Top Gun, Highway to the Danger Zone. That's what that is. So I expect, and I could be wrong here, that they're going to start buying up these bonds. They have no choice. They have to prop it up. If they don't prop it up and bond yields continue to spike, stocks will fall. They won't allow it. Unless they're literally going to let this come down. That would be one way. That would be one way that they would hurt the president, because he keeps touting the stock market. Well, if the stock market has a meaningful pullback here, people are going to get rattled, and there's going to be a lot of finger pointing going on here. So, I really hate when President Trump is talking about, oh, the stock market's had another record today. It's not real, and he knows it's not real, and that bothers me. I'm a Trump supporter. You all know that. But he said this was all fake under President Obama, but now he's saying it's real. Interesting. You should really be thinking about that here, people. There's no doubt about it. So let's move forward here to the dollar. The U.S. dollar is trying to gain traction here. It has been getting decimated as of late. It's trying to gain some traction, but again, it's part of the game. They're not going to allow the dollar to get meaningfully stronger. They're not going to allow the debt market to meaningfully sell off. Nothing is real. It's all being managed. There's no free market forces behind anything right now. Understand, it's incredible the environment that we're in. Fed minutes. You remember the Fed minutes from last week? Well, they were concerned about that yield curve. I just went over what's happening to that. Flattening out even further, and they're concerned about stock market valuations. Are they really concerned about that? Because if they were, what would they actually do? They would raise rates, they would start normalizing their abnormal balance sheet, but they won't do that. Why? They want the market higher. So it's the biggest load of crap, frankly, in world history. How anybody could sit there on a mainstream financial channel and listen to the Fed minutes, so it comes out of their mouth, and not say, well, hold on a second. If they're really concerned, why aren't they doing that? I mean, you can understand. You know exactly who I'm talking about here. They just will not follow it up. They will not ask a meaningful question. They just go about it as if it's perfect. It's just fine. It's incredible. Anyway, watch that bond market today. I don't know when they're going to attempt to start buying this up, but if they do not, and if bond yields do their only job, or if the market does its only job, and that is to determine a fair value, and these bonds really do start to sell off, we're done. We're absolutely done. But again, we've seen it time and time and time again over the past multiple months since I put that chart up for you on my website. You've seen it over and over again without one exception. They jump in there and they start buying up those bonds, pushing the yields lower, stocks go up. You can see the mechanism. It's very simple. All right, let's talk about just a couple more things before I let you go. Bank of America. I am still down on this trade, but it's up nicely today. It's up almost 1%. So we'll see if I can cut some of those losses. I am not buying anything right now. I want to watch that bond market. Let the bond market tell me what to do, and should tell you what to do as well. If I enter a new position, no matter what it is, I will post it on my social networks. Like I've been explaining to you, I will tweet it. So if you're serious about following me, that's where they'll be. If you're not serious, do whatever the heck you want. All right, with that said, I will see all of you at the market wrap-up. And today's market wrap-up is going to be very interesting, and I hope I don't blow my stock off later on. We'll see. I'll see you then.